I should add the caveat that this is all speculation and for entertainment purposes only. There's a lot of conflicting interests and a lot of competing motivations, even within the Federal Reserve System. But this is my take on where their intentions lie and where they diverge from the publicly stated intentions. So everyone knows that the Federal Reserve has been on a course of raising interest rates for a period of the last several months in an effort to stabilize inflation, or that's their publicly stated goal. But would like to make here a case that they actually have a different goal, and that goal, I believe, is to create organic demand to buy bonds. Now, every market fundamentally is driven by supply and demand economics, and if a asset class doesn't produce the type of qualities that would attract investors, then capital is naturally not going to flow into that asset class in a free market. And that's what you see in the bond market, right? These governments are irresponsible. They don't manage money. They're the worst capital allocators you could ever create. So, investors have faced the issue of why would they lend money to these institutions? Why would they lend money to governments? Because that's essentially what a bond is. And if you prefer that or pursue that idea from first principles, you can see how organic demand in the bond market has dried up. And that forces central banks to become a greater and greater purchaser as a net percentage of the overall bond market. Meaning that if you look at the US Treasury auctions, for example, over the years, the Federal Reserve has purchased a greater percentage of bonds issued at Treasury auctions, basically year over year, and that's a generational uptrend. So I think they realize that that's a problem, right? It's not really clear when you cross the event horizon. If at some point the Federal Reserve is buying over 50% of all bonds issued at the Treasury auction. It's not clear if it's 50 or where that percentage is, but eventually you get to a certain point where there aren't the only buyer of the bond is the central government, and of course, that creates its own inherent risks, and they understand how that's an unsustainable model. And so I believe what they're doing now is trying to create organic demand for bonds to try to create the type of environment where investors will step in and buy bonds off the treasury auction off their own accord without the Fed needing to step in and debase the currency to purchase these bonds to finance the government, which is ultimately their real job. And the best way to do that, to engineer that natural demand for bonds, is to engineer a recession, to push the market past its breaking point and force it down a recession. That's the environment where all of a sudden investors will become interested in bonds. Well, for one reason, because bonds have historically performed well during recessions. Um, Even if they're losing a small amount of money in real terms, they're still losing less money relative to other asset classes. But in a recession, there's always the Fed put in the option that the Fed will step in, lower interest rates, and then the value of the bond will increase. So that, in my opinion, that's the reason why the Fed is taking their actions. It's a privately stated goal that's different from their publicly stated goal. Remember, the Federal Reserve is a private institution made up of member banks that are privately privately held shares. The Fed has never been audited. That's why when people try to claim that they can know the supply of dollars or any of the Federal Reserve's internal workings, it's just not true because the Fed has never been audited. There's no way to verify the claims that they're making. Um, so that's why it's very hard to take the claims they're making at face value. A good example is that they have publicly claimed that they're going to engage in quantitative tightening starting in June. Well, if you look at their balance sheet, at times during June, the balance sheet increased on a net basis, and at times it decreased, but at a very slight percentage that's totally divergent from their publicly stated goal. So, of course, that seems to be where the market's headed. If the Fed engineers a recession, then all of a sudden you have organic demand for bondholders to step in. Once they're in, then the Fed would probably, engage in quantitative easing, give them a little benefit, increase the value of their bonds that they just purchased. Again, this is totally speculation, totally for entertainment purposes only, but just based off my analysis and in watching the Fed for a brief period of time, that's what I believe their real incentive structure is. Anyway, if you guys like this video, please make sure to like the video and subscribe to the channel, and I'll catch you guys in the next upload.